we are likely to see the start of interest rate normalization across Southeast Asia. Singapore, particularly, where interest rates follow the Fed very closely, is likely to see interest rates come down, which could affect the net interest margins for the banks, the yield curve slope. So all of those things are likely to change and ease some over the course of this year. One thing I want to bring into the conversation here is the capital flow pressure. So what we're seeing in Southeast Asia is interest rates being held slightly high just to counter some of these exchange rate and FX pressures that these markets are seeing, which means that we don't see interest rates coming down as quickly as would be seen just by the inflation numbers, which have been actually quite low.
I want to talk about Vietnam and this China plus one strategy. There seems to be a lot of conviction in this market with regards to that, particularly with the incoming Trump administration, and Vietnam no doubt becoming a beneficiary of some of the diversification of markets that we'd seen under the initial trade war. Do you believe that this is likely to continue? I mean, particularly when you hear about Trump talking about going after third countries with regards to tariffs to try to close loopholes.
Yeah, that is the interesting dynamic, this time around, where we do see this proposal for wider set of tariffs to counter some of the trade diversion that we saw previously. Vietnam, of course, one of the key beneficiaries from the supply chain diversification moves, the trade diversion moves as well. I think there's a bit of both sides to it. On the one hand, there is strong momentum for FDI in Vietnam, a lot of commitment, and we continue to see very strong electronic sector interest. That is unlikely to change in the near term. On the other hand, I think companies are starting to become a little bit more cautious, looking to diversify even further and not just rely on a single market like Vietnam for their supply chain offshoring, particularly given this risk. Vietnam also runs a strong trade surplus with the U.S., so it may be in the crosshairs for some trade frictions as well.
Yeah, and I mean, how are you watching currency dynamics out here in Southeast Asia, given the stronger dollar narrative and the ability to continue to stay competitive in this region?
Yeah, that has certainly come into focus quite a lot, and we have seen strong dollar flows over the course of the past month or so in particular, and that's likely to remain the case for the next couple of months while we see U.S. policy starting to normalize and the market has a clearer sense of the direction of that. We think that the Southeast Asian currencies are likely to appreciate over the medium run, given the fundamentals. However, in the near term, capital outflow pressures are likely to continue. We think that central banks would likely keep interest rates elevated to make sure that the exchange rate is attractive and that we don't see significant depreciation pressure. It will be a constraint on the interest rate market. We will continue to see capital flow pressures in the meantime.